Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast.
And he says, Mr. Munger and Mr. Buffett, what do you see as the arguments for longtime shareholders to continue holding their stock versus diversifying their risk across an index?
I personally prefer holding Berkshire to holding the market. I'm quite comfortable holding Berkshire. I think our businesses are better than the average in the market.
Is it because you don't think the market values it fairly?
Well, these are just accidents of history, and things are fluctuating at all times. But on a composite basis, I'd bet on Berkshire over the market. That's assuming we're all dead.
I recommend the S&P 500 index fund, and have for a long, long time to people. And I've never recommended Berkshire to anybody. I don't want people to buy it because they think I'm tipping them into some side. Never. I mean, no matter what it was selling for. And I've made it public. On my death, there's a fund for my then widow, and 90% will go into an S&P 500 index fund and 10% of Treasury bills. On the other hand, I'm very happy having my future contributions to a group of charities that will be spread over 12 years or so after my death to stay in Berkshire. I think the odds are Berkshire is, I like it, but I do not think the average person can pick stocks. We happen to have a large group of people that didn't pick stocks, but they picked Charlie and me to manage money for them 50 or 60 years ago. And so we have a very unusual group of shareholders, I think, who look at Berkshire as a lifetime savings vehicle, one they don't have to think about, one that they don't look at it again for 10 or 20 years, that will have taken care of the money reasonably well. I wouldn't argue that the S&P 500 over time. I like Berkshire, but I think that a person who doesn't know anything about stocks at all and doesn't have any special feelings about Berkshire, I think they ought to buy the S&P 500 index.
As a follow-up to that, Gerald Silver writes in, I believe you've directed the trustees of your estate to invest substantial assets into the index fund. Isn't that a vote of no confidence to your managers?
No, because we're talking about way less than 1% of my estate. And one thing I'm going to do, incidentally, all rich people get advised by their lawyers, set up trusts so that nobody can see your will and all that sort of thing. My will is going to be public record, and you'll be able to check at some point when I'm telling you the truth about what is going to get done. But 99.7% roughly of my estate will either go to philanthropies or to the federal government. And before it does it, I think Berkshire is a very good thing to hold. But for a given individual, particularly my wife, I just think that having a tiny fraction, which is all it takes for her to do very well for the rest of her life, I think that the best thing to do is buy 90% in an S&P 500 index fund. Now, the index fund people naturally have started. Over the time, they market more and more products that go to other indices and everything. So they're really starting to say to the American public, they're saying, well, you can pick what continent to invest in, or you can pick what industry, and we'll sell you something for that. And when they just have gotten through telling them, you really don't know anything about stocks, just buy the whole index. So, so I named the 500 index as one, but it's a tiny portion, but it'll be her livelihood, and she'll have all the money she needs and way beyond it, and that's that. But I don't mind having the 99.7%, large portion of it, assuming that laws are the same as now go to philanthropy, to be kept in Berkshire until they finally are disposed of.